The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This is Tuesday, the 13th of October. My pleasure to be here Monday through Friday, 11 o'clock till noon. Tiger Technicians Hour, 877-927-6648, as if you didn't know. Now, fourth hour, my pleasure to be here for the fourth hour. We've had some great shows earlier on with Tom and Larry. I'll be doing this hour, of course, and then at 12 o'clock, noontime Eastern, you'll get the Options Show, and that should be great with Kevin Hinks. And we've got shows all the way through. We've got Steve Rhodes, Dave White, Tom O'Brien back, Andy Hecht. Wow, full house. So let's go straight to the numbers. The reason why we were trying to buy this morning, the reason why I am a bull in the daily chart. The weekly charts have still got to prove themselves, but so far, the daily charts are actually quite outstanding technically. But based on the technicals, if you're looking at the E-mini right now, look, the stochastics at 97%. I mean, that's really strong. I would not be shorting into that, not at this moment. The MACD is still very strong. You've got your arch formation. A decisive close above this arch formation produces something that, hey, whoa, wait a minute, it does this. You know, we had it earlier on. It does this. The lowercase h in the Chapman wave methodology that produces a left side test, a successful test above the left side low, means that if there's a close above the arch high, especially if it's a decisive close, in this case is the 10-minute chart of the E-mini, and it closed above 2004.25, which was hit twice at 710 and 720, 10-minute chart, having gone down not to the 1996, whoops, why is that shady? 1996, can I get it? Yep, 75 level, went down to the 1990, oh, let me grab another mouse. Right there. Went down to the 1997-25 level. Then it soared and it kept climbing. It zipped right past the 2000 and what did I just say it was? 2002.75, 2004.25. And it went all the way in a left side, right side price time match to the high that was made just a moment ago. And that was at 2013.75. That's 25 cents less, the lower that is, than the round number high at 450 on the 12th. Today's the 13th. That was yesterday on the 10-minute chart. So that is a spectacular move. You know, talk about spectacular moves. One of the reasons why that's not to say we're going to have short positions, but one of the reasons why we're looking at the upside is because, let me show you something here. This is the 18th bar in the match that came from the low of 15,370 on the 24th of August. And it's taking leg D 4 sessions, it's actually really 5 sessions, above the 16,933 level. Let me just double check that. Yeah. No. 1, 2, 3, 4. Yep, 5 sessions. And look at the MACD. The moving average convergence divergence is so strong. The histograms are still expanding. The stochastics at 97%. I love that. So my contention has been that we are in an acceleration up phase we've been in up until now. The big test comes with this dashed trend line right there, which says, today's the day. 17,287 is the 200-period exponential moving average. The closer you get, the more you hang around, getting closer to that, the more it becomes a magnet, the more it attracts the price. So what I'd say to subscribers is that because we're looking at mostly up conditions in the sectors that we are positive in, and the sectors that we think are weak have been either failing or just haven't gone anywhere, we want to be buying. And what's important about this is that I had a Chapman wave trend gauge flash yesterday to suggest that the Dow, regardless of what the futures were saying overnight, we should be having a rug pull in the morning where the Dow goes negative. And my contention has been that there was a chance. This is what I had said in my overview section, if I can just find it, because I think it's pertinent to, oops, mistake. It's pertinent to what we're looking at. When I assessed basically here it is. Let me show you what we did. And then every day, these are the charts that you see. You see the Dow chart. I wonder if I can just get that right now. So the Dow chart with all the notations. Yeah, I can. So where is it? The Dow chart here with the notation you just saw, plus the extra notation at the bottom. And basically what I was saying, that right here, that's the first chart that goes out very early in the morning, 6:37, whatever it is. When I'm done, usually in the evening before, I'm ready to send it out. And sometimes there's a little change because of what conditions in the morning, but mostly I've pretty much done my work. Then the overview section, same thing, and I just polish it up a little bit in the morning. And what I had said here is that the Chapman wave gauge flashed a heads-up intraday Monday to suggest early Dow weakness. Leadership has not yet changed. In other words, my Dow quartet, GE, IBM, MMM, and UTX, still looking great. General Motors, of all things, is looking great. Now, what's really important about this is that I'd say the gold stocks might also need a little bit of a rest here. But what has to be considered is the VIX volatility index actually slid sharply, even though the market was rather benign. In fact, it was up just a little bit. So that makes the 17s the level in the VIX where there could be some selling in the market. Well, today we didn't even get to 17, I believe. Let me just move this away and see what happened. No, not only do I have to move that, but I have to move this. Yeah, we popped up to 1750, couldn't hold it. Now the VIX is trading at 1615, below yesterday's low of, yesterday's low was 1615. We've gone to 1614. We've already nicked it. So what I was saying is that today, if there is a Dow minus 60s, S&P minus 7s, and the Compex, the NASDAQ larger index was down 12, at 11:35, what are we down? We're at 11:15. Eastern time, the chances of stronger lower close will unfold. The first peak in this leg D for the Dow. Well, look what happened. We have, in fact, extended leg D. The Dow is now up 27. Look at the 9-period moving average at 16,889. I do have one particular moving average here that says be a little careful because we're getting close to where we could get a sharp pullback that is more sustained. But the price is acting very well. That attraction of the 200-period moving average is very strong. Let's go back to our story now. So what we're looking at, let me just double check this here. Oh, it even went higher. Look, we broke that high. So this, to me, this is really good action. This is just nice. So what I was saying before, now let me just go through the numbers. We'll do them all. IND, let me just check. No callers yet? Okay, that's fine. So there's that inside, there's an up channel that's taking place, and that up channel coincides for today right at the 200-period moving average. Doesn't mean to say we're going to get there. I'm just saying that's the channel. In fact, what I normally would do, I didn't want to make it messy. I would make this green, and I would make a lower one red, and what it would say is, aha, now we're getting to the Chapman wave inside track repellent area right there, right there. And from this area on, we've got to expect some choppiness. So we're getting close to a period where it doesn't say we have to plunge to the downside, but it does say that we could be getting to an area of a containment area, right? but the stochastic at 97%, that is a monster move. The 120-minute chart has gone to a new A, B, C. It's in leg D, having tested the 9-period moving average, having tested this moving average right here. Of course, I'm going to forget which one it is. The 14-period exponential moving average, and boop, it bounced. So this is now another D. Let me just type it in here. I'll just do this quickly. So let's run the numbers, and here we go. Dow's up 20 at 17,152. We're in a bull phase in the daily. The weekly phase is positive, but it hasn't given me signs yet. It's a weekly chart. Of course, I should have waited until Friday. Intra-week, we can get other indications, but I should wait until Friday. And it's suggesting that this is a very strong leg B, but the arch formation might still be quite a formidable challenge, all right? And the monthly chart has improved tremendously as it's testing the 9-period moving average. That's what some of our listeners were wanting me to do. Could I, at the same time, while I'm doing it, could I also keep looking at the bigger picture? They don't want to be chopped around by 120-minute charts, and some people absolutely want to be trading those 120-minute charts. So I'm compromising. So 2020.86 was the high on the 17th in the S&P. 2020.13 was the high 2 days ago, and today we've made a new recovery high of 2022.34. Leg D. Although I'm gonna say this again. I said it the other day. I'll try to say it again as clearly as I can. The characteristic of what I'm looking at right now has all the conditions of a takeoff. I call it a takeoff phase. Leg A or B in a takeoff phase. This is leg D. So something here is different. Remember, let me go back to the chart. The arch formation can produce a very powerful one-to-one move even, when in fact it closes decisively over the arch, when it's had a successful test. The S&P, 1867.01 on the 25th, not the 24th, but the 25th. Wasn't that interesting? Was the low, and the most recent low was 71, 1871.91 on the 29th. So far, a successful test. 2030 is the 200-period exponential moving average resistance, and we've just started right this minute, gone to leg B in the weekly chart, and it's a gray B. Remember, under a previous substantial peak, you got to think Grand Canyon. This is just retracing, trying to get back to a successful breakout that would go from a buy signal to a buy mode. Right now, definitely there's a buy signal, but there's no buy mode. Says there's no guarantee yet that you can go to a D. But yet, the weekly chart is improving, a monthly chart is improving a lot, not the technicals. The technicals still suggest there's a lot more testing to be done before we can break out. But we've seen that change in monthly charts before. So now let me do this real quickly. There's something in the Dan Fletch says, the $30 billion deal for General Electric's commercial lending and leasing businesses is expected to be completed in the first quarter of 2016. Wow. All right, here are the numbers. So the Dow, as we go to our break, the Dow's up 18 at 17,150. The S&P's up 2 at 2019. The comp index is up 12 at 48.51. Gold is, the GLD's up 37. Gold is up $1.30. Silver's up a tad. Dollar is up a fraction. And I'll be right back after these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So the question was in the den, Peaky asked, so if I understand correctly, Basil, we have seen the low for the year with 2 question marks? And my answer is, there is enough evidence at this particular point to suggest, and it's really a suggestion, that the Dow low of 50,370 probably won't be hit, but that doesn't really roll over to the others, the S&P or the Qs. The Qs are actually holding a lot better, but it doesn't necessarily mean that they won't test their August 24th low or go lower. And it doesn't even mean to say, and what I said was, most importantly, is over the last week or so, we've had no real big events that essentially are testing us on the downside. What is important is there's a chance that gold is starting to say, hey, we're taking this, whatever is going on, we're taking it quite seriously, and we've begun to act as if we are a, what is my usual term? My usual term is safety factor. That's bonds, is really a safety factor. But gold is very often is taken by, especially people who have experienced wartime, where gold was a currency, and I call it a currency of fear. So in a sense, we've got some of that, but only some of that. And if I look at the gold stocks, not all of them acted extremely well. Some acted absolutely fantastically with really big percentage moves off lows. Well, if you go from the 60s to the 10s and you move from 10 to 15, that is a fantastic move. But at the same time, I don't think gold has made its low just yet, because gold has to also be an inflationary factor that is more traditional. And I just don't see inflation being attributed to the sectors and areas that are normally the measurement. Now, if you and I go to the supermarket, there's just no way. I don't, for instance, the politicians. Has Elizabeth Warren ever gone to a supermarket? Has Hillary Clinton ever gone to a supermarket? Has maybe Bernie Sanders, a guy. Maybe even Bernie Sanders. Has he gone to have any of these guys gone to a supermarket? The stuff that you used to get, let's just say it cost $2.30 now, and it was for 8 ounces. If you look real careful, you don't even have to look. There was a period where you had to look real carefully. Now you don't have to look. Why? Because they've got the airline attitude. They've started to treat every part of it as a commodity. So they've shrunken the package, so you get less. Instead of the 8 ounces, you're getting sometimes 5, let alone 6 or 7. And the cost is either the same or the cost has gone up, as if to say, you got to expect cost to go up. And then they don't tell you not only is cost going up, but you're paying an extra 15 to 20% for the actual product, let alone for the actual boost in prices. So when you look at it that way, I'm convinced that the politicians are, for instance, the presidents, I'm convinced now, even more over the last year, that a president should have one 6-year term. Done. If you can't get it done in 6 years, you're not going to get it done in 8. 6 years, you're in, you're out, you've got to do what you want. In fact, they should even have it rotating. Democrat, Republican, whatever it is. But as far as I'm concerned, that to me would be a really good, and then you get rid of this constant battering all the time with the commercials on a rant now, why did they get permission to make these cold calls, the politicians? How did they squeeze under the radar for the no call zone? Huh? There's a no call zone. Don't call me. That's what it means. So, yeah. All right, there we are on politicians. So Triple M made in a very strong leg D in the proper D. This is not a recycle. This is ABCD from the recent low, and it's just below the 151.40 200 period moving average. It goes to 150.65, pulls back yesterday and today for a peak D in the daily. A very strong leg B in the weekly, but nothing yet has really changed substantially. The MACD did cross positive. That's good. Stochastics at 41%. That's good. But I would really need to see Triple M in the 157 to 160 area to say, hey, I think we're going to the all-time highs. At this point, I can't say that. But it did hold beautifully the red line uptrend support line. And the 120-minute chart made a peak D and it's pulling back. I don't think it's going to pull back all that much. It's got tremendous support between 147, maybe 145. But then I think the real test of strength starts to come in, and we'll see if it's able to go higher from there. UTX, same thing. I'll put up the UTX chart, but we're about to go to a break. Basil Chapman, Tiger Technicians Hour on this 13th day of October. Dow's up 7, S&P's up 0.74. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So just before we go to our next caller, I think I have to lambast I just said the same thing about the Democrats, but has Trump been to a supermarket? I doubt it. Does he know what a cream cheese costs? Does he know? Yeah, these people are really, in many ways, out of touch with the reality. That's not to say that they can't govern anything, but they're also out of touch. So I'm going to go to our first caller while I relax, lay back here a little bit, get my blood pressure back down again. Hi, Mark in Fort Collins. How are you?
Good, Basil. How are you today?
I'm well, thank you. On a roll, you could tell.
Yeah. Anyways. So yesterday, based on your opening call, I was kind of been watching the steel stocks, and I've been watching U.S. Steel. And yesterday, I grabbed some November 12 calls when it was in between like 12.65 and 12.88, or no, 11.65 and
11.
Yeah, and so it's having a nice run today. And basically what I'm looking for to finish this trade out is a peak D in the 120-minute chart, which would be over 1308. What do you think about that?
You see, there are a couple of things going on. It makes absolutely no sense in this environment to be looking at, you remember over the weekend I did a whole thing on steel, etc. It makes absolutely no sense to look at this and say, in a way I can understand aluminum because you've got Boeing is still doing, I mean, even though the stock down a lot, it's still doing okay. Got a huge backlog. and they use a lot of aluminum. And the Ford, 130 is doing great, and they use a lot of aluminum. In fact, they use more aluminum than ever. And other manufacturers are starting to use aluminum. Steel, the old-fashioned stuff, steel. Well, this is the starter area. This is where the technicals have come into gear, and if ever there was an opportunity based just purely not on fundamentals but on technicals, it's a position that says if there is a rally, if in fact the Dow cyclicals have made their August the 24th low, and maybe we come back and we do a retest in somewhere in the 15,000s, low 16,000s, high 15,000s, and the other indices, maybe because they are weighted differently, come down a little further in any real bad news event, you would have to say to yourself, wait a minute, steel? What is creating this demand for steel? And it's certainly, I mean, it doesn't seem right now that it's going to be China. What other countries? Well, that's a fundamental area that might come into focus as things, if they do improve. So this is where you get a starter position. In your case, did you go out somewhere into November?
Yeah, I went to the regular option that expires third week in November.
So this is just the monthly option for November, third week in November, Friday. Okay. So as I see it now, your risk reward is really a time issue, as long as between $11 and $10.65-ish, I'd say, somewhere around there. As long as that holds, I would say on a daily basis, because we're really looking at the potential for the weekly to start up. Let's call it on a weekly basis. That is a Friday to Friday close. If there's no close below $10.65 on any weekly basis in U.S. Steel, X is the symbol, trading at 12.24, up 55 cents today, having made a low this morning of 11.50. This is a spectacular move intraday, 4.62% from yesterday's close. So one of the things we're looking at here is that if you have a call position, it means what you have to handle is if there is a substantial pullback that then looks like it's going to retest the 966 level, because there's no question your premium will just, not only will it shrink, but you'll go to a decided minus position in the call option. And then you've got time on your hands because you've got all the way to the third week. Let me just check when that is. Right here. Oh, it didn't take a little while. So that would take you to the third
20th.
week of November. What's the date?
The 20th.
20th. I mean, that's a long time. But in steel's position, it's had such a... These arches to the downside have been so sustained that time is is really of the essence now, not for you to get your premium, but for U.S. Steel to take out the high of 3 days ago of 1308, start leg C in the daily. That'll change. That'll make the weekly the 120-minute chart very important, because 1352 will then become the 200-period magnet if it can go above that peak C. And then all of a sudden, what you're looking at is the best thing is you're going to start now thinking, how do I handle my call position, which is almost maybe not double, but it's in a 60% maybe to your advantage. And now what do I do? So that's a great position to be in. So I'm only looking now at the downside. And the downside says, if there is a close under both today and yesterday's low, which is the same, $11.50, then there's a good chance it's going to test the low 11 area. That's going to be important. If it breaks that and starts to break 1050, the reason why I'm making 1065, the reason why I'm making a big deal is the arch formation has consistently failed. This is the first time the technicals are suggesting quite strongly that it should go higher. I think that's you've got a great position there. The only condition that I would have for you is if you have enough that I would. This is one of those situations that if it actually gets to the 1330, 1350 area, there could be a fabulous November. So it's right. How you handle it. So I'm hoping to get a call from you to say, all right, so now it's at 1335. What do I do?
Well,
then we
actually,
can-
my plan is to sell half if it gets to a peak D in the 120-minute chart, which is basically 1309.
1309. Great.
Yeah.
I love that. That's great. And then what will happen is that you will have a choice at some point. If it goes to D, then pulls back, of maybe putting that back on because the daily is starting to hold in the 80% instead of 73% level in the stochastic. That's the best way I can look at it.
If that happens, there'll be a peak C in the daily, correct?
Correct. Yes.
Yeah. Okay.
So far your entry is great, the concept is great, and the weekly chart has a lot of work to do to it actually has to close above 1361, which will be the first time it's closed above in the 9-period moving average since the week of the 7th of August, and even that couldn't hold. You have to go all the way back to May, where it was trying to hold above the 9-period moving average for about 4 weeks or 5 weeks. So this is the first real opportunity, especially with that tiny little doji candle from last week with a low of 966. That could be a reversal candle. We're going to watch it real closely.
Okay. Thanks.
Nice entry, and thanks for calling. That's
right,
Mark
have
and
a good day.
Fort Collins, and a nice call and a nice entry point. Good planning. So, okay, now we're looking at U.S. Steel. That's X. I wanted to go back to Alcoa, talking about aluminum. See, Alcoa went to, I think that's going to have to be changed. I have it as a peak C. I think I made a mistake there by not keeping that. Yeah, I did have an F/C, and then I thought, no, it absolutely looks like a C because the MACD was holding well. Stochastic was way up in the 88% area, and then all of a sudden, bam, it gives back. See, this is the fear that I have with these big, deep cyclicals like aluminum and like steel, is that if we are to have a test, not of the August the 24th low, but of the down move into the August 24th low. In other words, a very sharp decline as the market, bad news permeates the market for an intense 10 days. If that, or 5 days, if that occurs, and Alcoa and United States Steel, X, actually hold very, very well, it's telling us that the economy is improving a lot more than people think. This is my interpretation. But in fact, if U.S. Steel takes out its low of $8.86 that was made in the week of the 25th of 9, it could very well go all the way back to $7.97. It could even take it out. That's the monthly chart. It's got these big swoops of an arch and a cup and then an arch. Now it's back in the arch formation, trying to come out with a cup. But it really, Alcoa at 1007 has to push above 1133 in the monthly chart, close above 1133 to signal that it's now in the cup formation. So this is a very important level. TVIX is a question in the den. TVIX. Our last little bit that we had there, I can't remember now whether we, what we did. I'll move it away so that I can get this in. So we don't have anything now. This is the 200% long, the VIX index. Now, the reason why I wasn't interested at all in getting the VIX, anything to do with the VIX on the long side, meaning that the market would pull back, is because I'm looking at, I told you before, GE, IBM, UTX, even if they pull back a little bit from here, they've held so well that my bias now is to be thinking there are more flurries to the upside before we start to tackle the serious support levels. And because of that, I just wasn't even interested. I wasn't even interested, had a question, number of emails about the IBB. And I said, no, I don't want the IBB. I don't want to go short the IBB here. I don't want to buy the BIS now. I clarified a whole bunch of things for newcomers to the opening call in this morning's newsletter. But most importantly, I made the point. I wanted, and when I had my call yesterday, remember we were looking at the IBB. I think Ben called, and I said, no, I don't. I want to rather short at the top of this rectangle formation, and I'd rather not necessarily think of buying, but not be shorting towards the lows. And I think that I'm not sure if I'm going to be proved right, because I don't know how much effort there can be made now to try to get the IBB from 309, the iShares Nasdaq Biotech ETF up in the 318 area, 315 to 318. But it's a very difficult, we've seen this pattern so often where a rectangle forms and all you do is you bounce until you break one of the levels. You just bounce from the lower level, in this case from the 285, 84 area, to the upper level, which is in the 218, what was the high there? 21, 223, yeah, 323, not 2, 323 to 318 area. And that's, I would prefer to be shorting there because then I've got that entire move to the downside. Here is a little risky because you can see in the 120-minute chart, it made a peak A, almost a double top, was a few cents higher, 308, 311.46, 311.50, 4 cents, so that's B. And then C, and now we've just gone to a D. We haven't gone to a D yet. 312.30, 312.48, we have gone to a D. So it's just a real quick ABCD. All it's doing is the rectangle formation. So maybe in this area, maybe the shorting or the 200% long, shorting it or going to the 200% short ETF is the idea. But really, I just don't see it breaking at this particular moment. There's just enough residual strength. So the question is IBB, and the answer is I prefer to add to our short position on a move higher. I'd like it higher. I might not get it. And if I don't get it, well, we'll just sit that out. Maybe we'll use the BIS. I'm not sure. 310 was the round number high on the 6th. And 314.48 was the high on the 5th. So somewhere in there, maybe that's the next opportunity. But I don't want to be shorting just right now. The IBB gives really great moves now that we've got the trend to the downside. And these pop-ups they can hurt. So I'd rather make it a risk-reward effort. So now let's do this. I want to look at PPA. I don't know if that was a spike to that had to have been a mistake, or someone, I don't know, put a trade in at $15.30 on the 24th of August. This is the power shares, aerospace and defense. Now I have this all notated. I don't know what happened to those things. It's A, B, C, D, E, F, G. So you've gone to a G at in February at 37.86. I think this is wrong. I'm just going to say, you know what? A stock an ETF that closes at 34.26 is hardly likely to be cut in half unless there's some aberration. So I'm going to put this in right here. I'm just putting it in. I'm Xing out the spot. I don't believe it, although it's price. And as one of our dentists said, are you telling me what I see is what I don't see? I'm saying, yes, what you see is not right. Because I don't know what trades there were at the point. I can go back and look. I'm not going to. All I think is that we're in a rectangle formation in the aerospace. Now let's do this. Look at Raytheon. Peak A, B, C, D, E. It's gone to an F and it's pulled back. It's only in a B, and this B is at an all-time high. So is it going to be a G, a recycle? Is that a G/B? Well, if you look at the monthly chart, you've got this cup formation, and that I'm going to call an E, legitimate E. And this is a very interesting thing, because why are the defense stocks, not defensive, why are the defense stocks at highs? What about LOC? Is that Lockheed? LOK, is that Lockheed? Lockheed is LMT. Lockheed Martin, there it is. Why is Lockheed Martin almost at its all-time high?
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, folks, here's the 10-minute chart. So it made that peak E at the 10-minute E-mini, made the peak E above 2014. It went in the arch formation, had a fantastic move all the way from the 1997 area, and it zipped up to the high today of 2014.75. Trading now at 2008. Now it's in the consolidation phase. So, that's what I've been talking about. The bias, I think, is towards the upside. That's not to say that we're in a digestive. Yeah, we're in a digestive phase right now, and that's really important. If you're looking at the SPY that I'm showing, and right there, let's see, this is A, B, C, and went to a D again. So that's the 120-minute chart has made its second D, and it's consolidating. Now, what's really important about this particular pattern, let me just go to the E-mini, ESZ15. You'll see, where did it go? ES, no, in the wrong place. They changed something. ESZ15. It shows you that there was a spike to the upside. Now, I had it as an A, but this is very important. This is not an A per se, it's an F/A. So the gray A becomes an F, E, E/A. And that says, watch out, because now we're in a rectangle formation. I was going to draw this earlier. I didn't have a chance, and now I have a chance. See this? A rectangle formation. A rectangle formation can last a lot longer than your patience. So we could be bouncing now a little bit, because now they've got rid of the option. The put options got huge acceleration to the downside. And then I love that. The way they do that. This is what I said to subscribers this morning. Watch for a 100-point down in the Dow. Then they'll get all those options, the put options, the premium will be accelerating, and then whoosh, they take the premium out, and you see the premium come into the call side. Hey, this is not for me to talk about. The expert, the specialist is Kevin Hinks, coming up next with the Options Hour from Think or Swim, and this is a TD Ameritrade show. So, hey, stay tuned, because I think you'll get a fantastic amount of information about options, as always. And let's just do this one little thing over here. I'll show you a couple of things that I'm looking at. I'm looking at, you see the TLT? The TLT ran up this morning to 123.60. It's trading at 123.12. My contention is that the TLT is now going into this kind of a rectangle formation over here. It's not that much. 124.72 is a strong resistance to the upside. I don't think it'll take out 126.21 just yet. And the downside has supported 122.11 to 121. I say 121.50. A close under 121.50 says, hey, we can make an arch formation, start to go down and retest the 120 area. But most importantly, if you're looking at the monthly chart, this is the pattern that says, hey, a rectangle formation, just keep going. The Japanization of our bond yields means we're just taking a little time out before going even lower. That's just the way it looks. Now, what's really important about the aspects that I'm looking at is if you're looking at the VIX index, I did the TVIX just now. If you're looking at the VIX, excuse me, what I said to subscribers over the weekend, showing them this, the three charts, the daily, the weekly, and the monthly, is that the power of the move down to test the 200-period exponential moving average will get a real workout this coming week. Why? Because the daily looked like it still wanted to keep coming down with this very strong resistance at the 9-period moving average it couldn't even touch. But the stochastic's down at 4%. It says it's ready for a little bit of a bounce, not much, but a little bit. But the way it went to a peak D, that aberrational move, 53.29, I don't believe it should have been 53.29. I think it should have been no more than 26 to 27. It almost doubled that because of some hysteria. I just don't think that was it. And that's the reason why I'm calling the August the 24th low, the internal low, and we've got to anticipate some kind of a residual low will be coming in the coming weeks. So stay tuned for Kevin and all the programs here at TFNN. Check out my opening call. I think you'll find it very interesting and giving you quite a lot of advice as to what to do. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,